Hey everybody, good morning, David Goose, Lieutenant Colonel Goose. Yeah, Goose. As you kind of talked to me last week about the boiled frogs, and it's like kind of like the way the market is. Um, so we'll talk about that more. It's not a time to get complacent, really. Don, Michael, Arturo, morning, Alan, Philip, Valerie, Merle, Francois. Thank you all for spending your morning with me, and Gary, Laura, Al, Mary, Anthony, Jeff, another Jeff, Donald, Ben, Craig, Rongamer, good morning. Back at work. Svenborn, Hawk, Warren, Cliff, Nikki. If you want to chat with me like all these fine folks like JB, Maurizio, George, just click the link over here, the subscribe button. Be a subscriber to the channel. A few seconds later, you can chat with me. And hey, there's Kimberly. She feels horrible. This is probably the best I've felt since like Tuesday. Tuesday last week. Yeah. So, hey, first timer. Marcia. It's not a common name these days. Anyway, Marcia, welcome. Love to have new people. Thank you for coming and watching and clicking the subscribe button. You want to make sure and hit the notification button. Later at 5 p.m., I will be live doing 30 minutes of awesome. That's where I do at least 30 minutes of your requests. And don't want to miss that, right? So doing that is hey, we do it every Tuesday. We've been doing it for over 2 years. So we'll have that coming up at 5 p.m. this evening. So hope everybody had a great Christmas. I know Kimberly could have felt better. She woke up with a fever for Christmas. Isn't that awesome? Probably got whatever I had. Like I said, I'm even though my voice sounds like gravel, it's the best I've felt for at least a week, if not more. Whatever it was, took me down. Did the webinar on Saturday and kind of crashed and burned. And Sunday was not much better. It's kind of laid on the couch all day. Got the videos out, but that was about all the energy I had all day. And then yesterday we just kind of didn't go anywhere, to the dismay of some of my family. But hey, I feel better today. Not 100%, but feel better than I have for a while, at least a week. So, and the market keeps on grinding up in here. I got all these arrows drawn. Do we pop it to an all-time high here? S&P slightly positive 5 points. It's kind of lackluster. This week historically between Christmas and New Year's is just kind of blah. Not really usually a big market mover. We do get the occasional exceptions. It's the last 4 trading days of the year if you need to do anything. Now, big caveat there, a lot of the tax requirements require you to have things settled, which only leaves today and tomorrow to get your settlement date by Friday. All right. So if you need something and it has to be settled, you got to get the trade done today or tomorrow. All right. Just throwing that out there. All right. Anyway, no questions. All right. So back to the boiled frog situation. Don't get complacent. Like I've started here that the market is just going to go higher into 2024, and that's a dangerous thought, really, to think that we're not going to get any kind of pullback whatsoever. I mean, we're sitting here, extreme greed. This is CNN's extreme greed, not Bank of America's. Bank of America's still lagging just a little bit lower. But we're up here running the race car in the red. It's kind of funny that they color extreme fear as red and extreme greed is green. It's almost like opposite. Like when we're up here, we're extreme greed, we're about to pull back. And when we're down here in extreme fear, we're usually about to launch off. That's typically the way this works. And when we pop over ads, love ads. We look at S5FI, we kind of hit the limit here. Like that was 16 days. I ran some numbers. It's usually between 15 and 20. It's like 15 and 25, I think, when I ran them. That was the kind of the common right in that zone. So we've got another couple days that we could potentially hang out here, like 2 more weeks. 20 would be right at the end of the week. 20 days up here. And right there. 29th. We could run it another few days into the new year. That'd be 25 bars up here. Then we're probably going to get a pullback. So we could see this hang out just a little bit longer, but we're running in the red here. Don't get complacent. Watch out. We could get a pullback. It could be violent. It could flush a lot of participants out. And we saw one of those flush out candles last week. One big red day, then an inside day. That didn't really tell us much, right? Really 2 inside days. And what do I mean by inside days? Well, it's when you look at that range on that candle right there, these 2 candles hung out inside the range of that candle. When you go like this, in fact, when you count the wick too, I mean, we directly inside. Now, that's indecision. We saw something like that before. We've seen these when we start getting near the top. Look what we did before. Right here. You recognize that? And there. Very similar pattern there. Then what do we do? See these 2 candles? Doesn't that look a lot like what just happened right here? Right over here? Look at that. All right. It's never exactly the same. That's echoes in the market, not, that's what they always say. The market never does the exact same thing. It just kind of, does similar stuff. So we have to take the past and say, well, there was a giant candle there, and it kind of reminds me a lot of what happened in July, right before we took a pullback. So January could be, we could see a pullback in January. So, as Jeff says, sounds like it might be a good opportunity for VIX calls if that's the way you play. VIX doesn't have to respond, but, VIX is definitely beat down. And it did pop up just a little bit so far. Was that just the first move and we get a bigger move? Probably. If we're going to respond, we don't typically hang out at the bottom very long. And as we've talked about the seasonality for VIX, it tends to drop off into that first week of January and then spike. So if you've not seen this before, this is 20-year average of VIX right here. We're kind of in this section right here, this last little bit, we might see a spike. Historically, 20-year average, we usually see a little bit of spike in VIX that last week of December. Then we plummet out in January, and then we go on a nice run into February, pull back, and then maybe this is a side effect of COVID, but we do tend to see volatility increasing into March. Then it kind of dies down into the summer. Then we see it ramp into October, which, you look at what happened this year, that's kind of exactly what happened. We got February, March, we got some volatility. We kind of went complacent into July. Then we got a pullback. And it stopped right at the end of October. And then we went on this epic rally November, December. So, even though it's never exactly the same story, don't get complacent here, okay? We could see some increased volatility coming into the markets. What do we have coming up? What's coming up after the first of the year? 4 days, then we have what? Brand new quarterly earnings. Financials are going to kick off first. And then we're going to roll into big tech and then all the other things. So, yeah, you got to watch the profit taking versus booking the losses against gains that you've already got. So it's a very careful balance, I guess you'd say, Anthony. If you want to reduce your tax burden for the current year, you're going to have to book those losses against the gains before the settlement date. So that's all I was trying to suggest. If you got some losses, net open losses you're carrying, you might want to put those down. Anyway, so there's Russell, and we could end pretty strong here with Russell. This is, if you look at it from the end of October to December, that's pretty much been Russell this year. Very, I guess you'd say historically seasonal. The historically seasonal move in Russell, that played out very well. NASDAQ also very, very strong here. Didn't even really get any pullbacks in there. Yeah, never forget the wash rule, though, because if you buy back in 30 days or whatever, you can eat the whole cost. It can become detrimental to you. So that's there's lots of rules to it. So be very careful. That's why I typically, interesting caveat when you play options, if you use different strikes and different expirations, they count as different instruments. So if you're always changing your strikes and expirations, you don't fall subject to those wash rules. They just consider them different instruments. So seasonality on S&P. Typically we start in October. This actually pushed out to, this pullback was deeper and we had a pretty historically seasonal move in S&P. So this last of the year move has all been pretty historically seasonal. And it looks like the market is opening. HSBC making a move. Let's see what we got here. What do we have? Potential getting near a roadmap line. If that can break above that zone, may very well extend out to 44, 46. This fits in line with, their earnings aren't coming out till mid-February, it looks like. Some money flowing into financials. You can already see it right there. You can see it right there. It's been flowing in ever since November here. Money flowing into financials. Even KRE. Looks like they slowed down just a little bit right there. Some money flowing in. Interesting. Interesting to me, like just to watch the patterns in the market. Now, I did bring something to talk about that goes with this. I just have to find everything rearranged. I love this. I love Windows updates because it switches everything around. All right. Back to the server and back to my stuff for videos right here. I brought this right here. Zoom it up so we can see. So here's what we've had. This is where money has been invested or not invested this year. All right, this is Q1, Q2, Q3, Q4 for 23, year to date, how we're sitting. The biggest losers, energy, basic resources, telecom. And as we look over here, the biggest winner for money flowing in, cyclicals. These are funds, fund managers and stuff like that, and fund flows. So we see autos and parts, financials. So typically what we see is that the stronger ones don't continue to be strong. All right. We see the laggards, especially the worst ones, are usually where opportunity starts coming up. So as we move here into 2024, the things that have been beat down in 2023, usually we'll start to see some money flow into those opportunities because they were so beat down. They were so forgotten. So these things down here may be opportunities. This is back to that conversation, don't get complacent either. Like just because travel and leisure was a pretty banger in 2023, this could be this could shift from this end of the scale all the way down to this end of the scale in 2024. This rotation of stuff. All right. So just be careful, all right? Keep it in mind. So these may be the opportunities. That's one reason why I'm so focused on watching oil right now. Energy, basic resources. Then you have consumer products and services. That seemed like it was doing pretty good this year, but it actually had underperforming investment in it. Healthcare, that was underperforming. So this may have, healthcare I thought was further down the list, but this shows it wasn't really. It did underperform for the year, but especially fund flow wise, and we could see this flip up here this year. So we're seeing utilities up, lots of, it's kind of interesting where the money flowed into, especially auto parts. But we saw those autos, it's like a side effect. Loans got more expensive because of the interest rates. All of a sudden, you got to fix what you got. Auto parts, right? You got to hold on to the vehicle longer. That means more maintenance costs, more parts, keep the car going you got. And look at that. Auto parts ended up being a pretty good winner, especially Q3 into Q4. Well, yeah, Q3 was the big winner in auto parts. So that's not a thing I've ever done, Michael, so I can't comment on that. So anyway, these extremes, more likely to balance out. That's kind of the return to mean situation. So when they're on the extremes, it's like travel and leisure, more likely to underperform, so that they'll be kind of even on the average. And then energy, at being a laggard, more likely to potentially be a top performer, or at least for fund flows in 2024. And it's one reason why I've been keeping an eye on it. So yeah, it's kind of sector rotation, but these aren't necessarily sectors. I mean, like stocks 600, that's not like a general sector. These are like fund. I can't remember the word for it. These are, I guess you would say, sectors that a fund likes to invest in. So stock 600 is going to be the European market. And these are worldwide. So, and there's an estimated like $6 trillion sitting in money market funds. Roughly, it fluctuates constantly. If that money starts chasing opportunity in the actual market, because, hey, look at the market, this year. If you had it parked in money markets for all of 23, let's just pop over here real quick and let's talk about this briefly. So if you jumped into a money market because, hey, that money market was paying 4, 5, 6%, you just missed out on 25% gains on that money. Well, sure, it was a lot safer, but that was 25% gains. So you're 5%. You just missed 20% potential upside. If this thing, fear of missing out, like what if we tacked on another 20%? You just missed out again, another 15% gains. That gets you way behind. So if that $6 trillion jumps into the market here to catch that, even if that never actually happens, then we can see that. So I think we could see $6 trillion move and push us higher. So anyway, yeah, as Goose has talked about quite a bit, that there's like 10 big trading days that basically makes the market. So Bitcoin is in which sector? It's not really a sector. It's its own asset class. It's not really looked at. Bitcoin's not investable by funds right now. That's the big thing. Is that currently most institutions can't invest in Bitcoin. It's just like off limits. That's what the ETF, the spot ETFs that are going to be approved, that's what it kind of unlocks, is that all this fund investment that's been sitting there waiting, like they want to get a piece of crypto, but they can't. They can get like pieces of miners and stuff like that, but a lot of them are in these danger zones price-wise for funds. So they kind of have to, they've mostly been staying away from it. But when BlackRock and Fidelity and Valkyrie and Invesco and all the fund people get their funds approved, and now all of a sudden it unlocks the ability to buy those Bitcoin ETFs because they've been regulated and approved. And BlackRock in particular has approved partners that can participate in their ETF. And that's JP Morgan, Citibank, and the list goes on. They're going to be able to buy and participate in the ETFs. Now, I think it was one of the Michael Cannon maybe, sent me an article over the weekend, saying that, is this going to destroy Bitcoin? And it was, I almost had to laugh because it's almost comical, oh, we're going to lock up some of the Bitcoin and it's never going to move. But that's exactly what the SEC is trying to prevent with what they've said. They're requiring them to actually buy and sell the Bitcoin, not just in-kind transactions. That's been a big contention in the fine print of how the ETFs are going to operate. It's beyond the scope of this whole conversation here this morning, but they want the Bitcoin to keep being transacted. Like if they're going to hold it, they're going to hold it. If they're going to buy it, they're going to buy it. If they're going to liquidate it, they're not going to in-kind they're not going to allow in-kind transactions in the ETFs. They're actually going to have to transact this Bitcoin and actually hold it and actually have a fiduciary and no funny business. So I think it stems back from FTX blowing up. They don't want it to just be like, oh yeah, we got the crypto, no big deal. And then the lights come on at the bar and it's like, oh, well, we're missing 20% of the Bitcoin we said we had on the books. And how do you account for that? Well, we'll see. We'll see what actually happens, but could be a big event coming up here. And the SEC's basically reported that they're going to, right after the beginning of the year, so either next week or the week after, which is ARK's final deadline. So we've got about 4 days this week, 4 days next week, and 3 days the week after, which that's 8, 9, 10, 11 days. We've got 11 market days where that's about it. And we're probably not going to get this approval this week. So it's going to be either next week or the week after. And the final deadline for ARK is that 10th. They either have to approve it or deny it. And if they deny it, that's a lawsuit. So we're looking at some fireworks in the Bitcoin space. Now, to circle back and talk about the the threats, the article that I was sent, it said, well, they're going to lock up this Bitcoin and those transactions are just going to get transacted in the ETF and it's not going to take place on the actual blockchain. So if those transactions don't take place on the blockchain, then the miners don't get paid. Okay. We have mining that's going to take place for another 150 years before the rest of the Bitcoin gets mined out. So they're getting paid with the mining. Now, at what point does it become such a small amount of Bitcoin that it doesn't make sense? I don't know. The halving event is coming up in April. And right now you get 6.25 Bitcoins per block minted. And as you can see, we've got 16,000 blocks left to go. So 16,963 times 6.25 Bitcoins. That's how much supply is going to hit the market in the next 115 days. Then after that, it gets cut in half. So instead of 6.25, you got 3.125 plus, 3 point, I don't know, it's like three and a weird amount. 3.5, it's 3.7125 or something like that will be the new reward. All right. So after that halving, which is roughly April 20th, you'll get 3 Bitcoins for every block you mint. And that'll continue for about 4 years, another 200,000 blocks. And then sometime in 2028, we'll see another halving event. So I don't foresee, miners are going to keep getting rewarded 3 Bitcoins. And if Bitcoins go up to 100,000, 300,000, that's a pretty good reward. But even though we're likely to spike up to that high price, we're also likely to get that large 70 to 80% drawdown once again after the big spike. We'll probably come back after we top out somewhere in the 1 to 300 zone. We'll probably come back into this $60,000 area once again. So it's all about time frame. Could we see a mega spike on the ETF approval? Yeah. Is it likely to come all the way back down if we do that? Yeah. So be careful. Some volatility definitely coming up in crypto. Could it be just a sell the news event? Like ETFs approved, hype's overdone, sell. Yeah, we could. We could see that. I mean, that's what I got drawn right here is we could see this drop right down in through the halving event. Like this hype that we have now could top out and we could see this pull back right there. So no done deals in crypto. They're highly likely to approve some Bitcoin spot ETFs. I think 6 out of 12, or what I've heard, is likely to get approved. Then is it a sell the news? I don't know. Is it a holy moly, everybody's dumping money into Bitcoin, super hype, super crazy pop? We could see that too. So I got lots of stuff drawn on this chart. Probably ought to clean it up at some point. All righty. Hey, everybody. Welcome. If you're brand new here, that's a lot of information, I'm sure. I just kind of bumbling through. There's a lot of stuff bounces around my head, thinking about different things. So, all right. Like I said, S5FI definitely cooked. S&P sitting here. Are we going to push higher? Do we actually go for that higher high today in this low volume week? Maybe not today. Maybe not tomorrow. We could just ramp it right up here, tag that higher high before we drop off. Just remember, don't get too complacent, all right? It's kind of the theme for the day. News-wise, we don't have a lot happening today. Almost nothing. Tomorrow, almost nothing. Wednesday, Thursday, Friday, almost nothing. Kind of a boring economic news week. Not much happening. Then as we go into next week, again, holidays around the world on Monday for the first. Tuesday, not much happening. Wednesday, though, we get some manufacturing PMI, some jolt jobs, FOMC minutes. Thursday, not much. Get some non-farm unemployment claims. And Friday, we get the jobs reports and some services PMI. So, slow start to the new year. Then we come in the second week there in January. And again, not a ton of stuff. We get some CPI. We just got CPI, it seems like, and we get CPI again here coming up on the 11th. Hey, it happens every month. So relatively benign for the next couple weeks on economic news front. So it's all going to come down to sentiment, and kind of leaves this Bitcoin thing wide open to just wreak havoc. So there you go. NASDAQ looks like it's going to continue to grind a little higher. We could hit the 1618 up there around 17.2. Russell continuing to push a little higher right into this resistance zone. It's been the resistance zone since all the way back here in 22. Excuse me. Popped up, hit that resistance, and dropped, and haven't been back up there until, golly, excuse me, that monster talking back to me. So I haven't been back up there since. We may come up here and test it. That's the 618 for that whole big drop. If we hold that and turn down, we could see an outsized move down. Highly cautious there. Now, oil, like I said, this one could throw the wrench in the works for cuts next year, interest rate cuts. If this thing takes off, and gold and oil, as I was talking about, has a historic ratio of about 20 on average. That's gold, the yellow metal, is usually 20 times the cost of black gold, oil, in dollar, cancel out the dollars. Usually takes 20 barrels of oil to make an ounce of gold. If we come up to that historic average, that puts oil about $100, maybe a little better. That's way on up here. Now, if gold the metal continues to rally, that can bring black gold with it. That's all going to throw a wrench into the works on controlling inflation. So this is a big cautionary tale here. This is one to keep an eye on. If we start seeing oil rally, things are going to get real squirrely real quick for the narrative around cutting rates all those times next year. I think oil can call the bluff. So gold looking like it may break out, but just being lackluster so far today. Down 2, almost flat. Bitcoin, as I've said, it's waiting for the big news. May just kind of churn in here until we get the final news, the final approvals. Then is it buy the rumor, sell the news? Or is it, holy cow, the Bitcoin supply is getting sucked up, vacuumed up like a Hoover, supply and demand issues, supply shock, reduction in supply can create prices that just go exponential higher. If we see that exponential spike, I do kind of, I would recommend that you protect your profits, maybe book some profits, and wait for the price to come back down a little bit to reload. Because I don't think we're going to just be on a sustainable blast off. I mean, there's a chance I'm wrong. That happens. Ethereum, not participating. And this one may be telling us that Ethereum's prime is come and gone. Switching to proof of stake may ultimately play out like I thought it would, and that it was a mistake to do that. And they may have jumped the proverbial shark, as Kimberly loves to talk, loves that saying, and they may have screwed the pooch on that one and wrecked Ethereum by switching to proof of stake. Dollar continues to push lower, and we're probably heading down to the prior lows from the summer, if not pushing on down into the 90s. Stuff moving today, RYZB. Look at that pop. That's a biotech, biopharma. Not much to do there. Wasn't much history either, so it's just not the kind of thing I chase. ANSS, packaged software. Ooh, look at that spike down. It spiked down and went right back up at the close there on Friday. Opening up just a little lower today. Yeah. This looks kind of like the list. Let's see. Let me double check this. Yeah, that's today's list. LABU. Probably be very cautious here. It's looking like we could top out and roll down again. This is a big downtrend. This is leverage on biotech, which, I mean, let's be honest, that's about as dangerous as you could get right there. This combining two of the things that I caution about: leverage in biotech. Oracle. I mean, not Oracle. That's Grace Biotech. ORCL. No, GRCL. That one popped up. Low price stuff and biotech. Lots of biotech this morning. Biotech. There's a SPAC. Not much to do there. That chart is difficult to trade. And TES. Yeah, this is a holiday week, and it's just not much cooking. That looks like it could be the bottom. Watch for that to pop back above that roadmap line right there. If we can get back above that stuff, going on higher. And it could be in a big way, like much bigger than this. We could be talking like targets up here. In that zone. ALB. Yeah. Biotech is gambler's paradise, is what I would call it. ALB still below resistance. I wouldn't really mess with that until... I don't like to go short stuff because the market tends to go up 8% a year on average. And why do you want to I mean, unless you just know something's going down, like COVID times, or we're getting a big market correction. For the most part, it's easier just to play long with things that are looking good. This one looks bad and looks downtrendy, and probably stay away from it until such time as it starts making a bottom. LI, ugh, it just keeps churning. Failed to break out. That hit the 618. That looks like it's going to go down further. IINN, medtech specialty, biotech garbage, just $2, $1, $2. There's just nothing to do there. Holly. That's just choppy and overlapping. Incredible. Like these charts after the 1618, but that would have been very difficult to stick with for that move. DPST. And money flowing into banks. I mean, you see it right there. mRNA. None of these are moving very big today. The list, it's a lackluster week, and most of this is uninteresting. USO potentially gonna run. XBI, biotech, EDU, still working on the pullback. Probably gonna come back to the roadmap line. SSYS, Stratasys. 3D printing industry is having a little bit of consolidation, merger acquisition. It's not been while it is like an amazing technology, it's not been the fix-all that they were hyping several years ago. And a lot of companies are scared to like. So this could be a very transformative technology where you release the design files for knobs and parts and stuff like that, and let people fix their own parts. But that doesn't help you make money. Companies are very stuck in the traditional sense, like they want to sell the parts and make the money, whereas they could not warehouse the parts. They could just release the part files for those knobs for the stove, and then you could print your own stove part. But I don't know. It's just, it takes a mind shift, and it seems that we humans aren't quite to that point where we want to accept the paradigm shift. So 3D printing is having a hard time. Great in prototypes and engineering, but difficult to make it out to consumer products. So Intel continues its beast of a run. SOXX. Doesn't that look a lot like the Intel chart? SOXL. SMH. NVDA. And AMD. Yeah, so AMD and Intel running while NVIDIA is kind of stuck a little bit. Could see AMD pop on up. Intel looks like it's getting a little too hot. May experience a pullback, kind of a drastic one. Back into the roadmap line. Wouldn't surprise me. Let's see, Taiwan. Let's see, TSM. That one's lagging. Micron's running pretty good. Interesting in the semiconductor space. It's like a haves and have-nots. We were seeing that in retail too. SOM. God, what a horrible chart. Don't trade stuff like that. It made the list this morning, but MSTR getting smacked a little bit with Bitcoin pulling back. This one could go crazy depending on what happens with Bitcoin. And BOILED continues to be pretty horrible. Natural gas continuing to probably push down. We don't get some kind of big cold snap that freaks everybody out. We're probably going to push down to the bottom. BitX, that's it. We'll play with fire. Buy you a little bit of this for that potential Bitcoin ETF approval. That's leverage on nitroglycerin right there. That's what I'd say. So, and ZIM, look like that's going down in a blaze of glory. How do stocks make the list? So I pull up. Let's see if I even have it up. I don't. I mean, so in Discord, I have a link. Let me pop it up real quick. Oh, that was not it. That was not it. Man, what the heck? What the heck? Let me pull up this website real quick if I can find Discord. There it is. All right. And the links for, I think it's links for stuff channel. I have pre-market movers under news sources. It's right here. This page. Oh, don't want to show my personal information. This page right here. There's stock screeners and pre-market tools, and I look at the pre-market movers. I usually grab the gainers and decliners. Anything I'm moving about $2 or more, that usually makes my top list, stuff to talk about. And I also combine it with some stock twits occasionally. See what's hyped up. So I'm usually looking for stuff moving $2, which, you know, a lot of these were in the pre-market and then they kind of died out. So AAPO, and I have the link for that. It's at Market Chameleon in the pre-market tab, and it's free. Like, it doesn't cost anything. So Apple right there look like it's gonna be lackluster. Google, that was a big came down near the market roadmap line there, made a higher low, and then taken off right at the targets. I would be careful. Looks like 147 might be topping out. I want an update on Netflix here. We're getting close to the target. I bought down here at 400 after we did this. It popped up. 401, I think, is where I bought my share. I bought more than one share, but had to liquidate due to a margin call situation. Got myself into. We could see that pop on up. I have an order to sell right around 515. And that was the classic pattern right there. And we're still likely to push that on up. Other stuff I kind of like. This one, TGLS. Bought as we poked up through. I think I bought some here, maybe added some here. I don't remember exactly, but target's way up here. That's probably going to be a triple just on shares. Beautiful potential. Bought that 11.623. That's dated. Excuse me. Dang. Sorry. I don't have a dump button to dump out the. All right. Bias for the day. I'm thinking we just kind of lackluster fill out the rest of the week here. So if I've said anything that you found beneficial, please hit that like button. Give me a like. Give me a share. Share with friends. And I'll be back again at 5 p.m. Eastern to go live and take your request for at least 30 minutes. So I'll see you guys later. Be careful out there. Remember, it is Crypto Unleashed Day. We're going to get a Crypto Unleashed trade going. And that may correspond right with the Bitcoin ETF. I mean, this could be explosive this month. So hope everybody has a great day. We'll see you later.